Okay, back for another daily review of NASDAQ. This is November 10th, Thursday, and almost through the end of the week. And what a wild day it was with the CPI news release. We've seen a huge daily candle that expanded to the upside today. Man, it just is an awesome feeling right now that I have. And what I'm feeling is a total sense of peace and comfort with just how I am navigating the markets right now, and mostly with respect to my emotional state. Um, it wouldn't have been that long ago when I would have seen a big move like in CPI, and I would have felt like, oh shit, like I wish I had gotten in that. I wish I had gotten involved. Why didn't I know to buy? Why didn't I, like just chasing just the sense of like, oh, I need to be in the move. And I just don't feel that way at all anymore. Um, in fact, there was just no, I wasn't even awake. I mean, this is 5:30 in the morning where I live. So this huge move of 500 points, I had, I wasn't even conscious of at that time. And you would think I need to be involved here somehow. I somehow need to know to buy when all this is going on. I need to understand the macro environment, and I need to have known to buy this, but you don't. And what I've been learning is that I traded today and I made money on this section of the day, well after CPI took place. Um, this little chunk, I made more doing this than I made on any trade this week, and so and it was done confidently without stress or fear or eagerness. It was just following the plan and staying pretty neutral, even keel. So pretty pleased by that. And another thing I want to just mention that I'm happy about is I've been essentially wrong on the bias. I think every day this week. I mean, more or less wrong, and I've been profitable every day this week without. And by wrong on the bias, I mean a day in advance. Like me looking into tomorrow, you know, I always try to give a sense of what I think might happen, but but it's funny. It's like you just really don't ever know for sure, and you just have to react and understand what you're gonna do when certain situations happen. So for me, I mean, I think at the start of the week, I'd have to go back to the recap. Was it when was the start? So this is Thursday, Wednesday, Tuesday, Monday. Um, or was it last week? I can't remember where I was. Maybe it was up here before I started even doing these recaps. I thought we were gonna reach to these equal highs. I think when we were like right around here, maybe after this daily candle, I was like, we're gonna go up to here, and obviously we didn't. And then here, when we came down here, I was thinking, okay, we might come up here and fill this gap and then come down. And then especially after yesterday, after we made the swing high and closed below the middle candle, I was like, okay, certainly we're going to go lower now. That was just my guess at the end of the day. And then obviously CPI happened and it was a different story. But you just have to react to the price action and what the market is actually doing at the actual time that you're trading in the session, and then in that short period of time anticipate what could be happening next. And that's the guess that you have to be right on. So I don't have to be right on what the price is going to do tomorrow or the next day. It's just kind of more in the moment. And so what I want to highlight from the trades of today was that, first of all, let me just put on some of these levels here. I don't know why I have this. That's from a while ago. Okay, so these are these equal highs. First thing I want to mention is this monthly gap here, this monthly imbalance that we've been aware of since the beginning of the month. And when we were down here, it was like, okay, I guess we're leaving it behind. But now it's safe to say, I think that we're gonna probably reach into this. How far, I'm not sure. Whether we trade through it, I'm not sure. But until we hit that, I'm gonna be aiming towards this area on the monthly chart. And then also on the monthly chart, this was the monthly open, previous month's open that I had taken a few trades off of, based off of this earlier this week. And I also have put on, because it became relevant today, the monthly open for this month, the current month of November, because it proved to be another form of confluence that helped me in a couple of trades today. So let's get into it, into the recap. This is where we are on the daily. I think we're now clearly reaching up higher, and not to say we're going to go straight there. Maybe we consolidate, but I wouldn't expect a deep pullback at this point. I think the market's been heavily bearish, and then with the lower than expected CPI reading, it was just going to crush the bears without any kind of pullback. It's not going to let anyone out of a bad trade. So anyone who has been shorting this move up, expecting a continuation lower, anyone who shorted after this pin bar, anyone who shorted once this started to move down, thinking that the high was in and left their stop there, was completely just destroyed, basically. And the market's not going to come up here and then come down and then go up and then come down, not in this type of situation when the market had been overly one-sided. It's just going to smash through. So with that thought process in mind, I didn't mind being a buyer after this big spike. It was just a question of where and when and why. It wasn't going to be, so I didn't feel the risk of, oh no, I'm going to buy here and it's going to come all the way down. Not after we started getting these solid candle closes, in all these time frames. So if we look on the hourly, we were getting very strong candle closes. Now you can get one candle close and then you can get a U-turn all the way down. So it's not like this is always the case, but when you start seeing it on every time frame, these very strong candle closes, and when you see that the next candle barely dips down, this candle close, this candle can't even make it to this candle's high. So we're not even getting back to the old candle's high. There's just a lot of strength in this market where I think it's, you have all these targets here too. You have this high from the what was it, FOMC from last week. You've got this double top. You've got this imbalance. There's just so many upside targets. This imbalance up here on the monthly. There's just so many juicy targets to reach for. So if we go down into the 15-minute chart, and let's take it to when I was more or less awake. This is the New York Stock Exchange open. So the 15-minute chart, I basically woke up around here, saw what had happened, and see these very strong candle closes on every time frame, and I'm thinking to myself, okay, where can I possibly get in? Where might there be a trade? And so the first, I marked off this level because this is an imbalance from here to here, and then also from here. And I didn't know if it was going to come down further or here, or what it was going to do, or even hit it at all. I didn't know, but I was just watching at the open, and I wasn't going to trade at the exact open. But what we have here, first the market spiked up. So this is what I love this. We've been going up. The market actually opens and it shows a huge bullish candle at this point. And then it just, so anyone who's just, if you're buying, just continually buying, eventually you're going to get some kind of pullback. So you have to have some framework. There's this lower time frame range that at least I'm looking to buy at a discount relative to this lower time frame. And also we have this gap here, and anyway, the actual trade itself. So this is going to show the divergence between ES and NQ. So at the open is right here. We come down, we take this low. On ES, we don't take this low. So we see a divergence. And so right there, I'm thinking, okay, I want to be involved if we get a order block to form. And I'm focused on NASDAQ because this is the one that rated the level. You can make the argument that actually you should be buying S&P here because this is the stronger of the two. It's making a higher low, but I'm focused. I predominantly will trade NASDAQ no matter what. Not always, but predominantly. So anyway, as this was forming, I was afraid of this exact scenario, that this candle was going to close close to near the top of the range. So what I did was I put in a little starter position. Well, I was like maybe a third of my normal size. And as it was breaking this high, anticipating that we would close. And if it didn't, if it came down, if it wicked it and then came down, either I would have held and taken the full third loss, or I would have cut it. Either way, it was minimal risk to me to put that position on. And with the thought process of I'll put the third on, and then if it closes here and it pulls back, I'll put the rest of the position on. But what ended up happening is what we see, it just kept going. And I just I'm like, okay, well, I'll just be happy with a small little position for today and see how far I can take it. I am a little bothered by one thing, which was once this pushed up, I had highlighted this wick, and I was planning on buying on a retracement into this wick, this order block right here. I wasn't expecting it to go deeper, and I just didn't see a setup at the time, but clearly we got one. It comes in and it pushes up, it creates this order block, this engulfing. Yeah, that should have been it right there, because we also had this low taken, and then on S&P it did not take this low. So it's the same concept as before happening again. We have the divergence, we have the liquidity grab and a point of interest, we have the trigger, the entry trigger, or the signal, and then the trigger, the retest here, perfect retest, and then it continued. But I did not take that trade. Actually, I did take a loss on another kind of 1/3 of the position. It was this right here. So I took a loss here. Same idea. This one wicked here. I don't think it did on S&P. There's a divergence, pushed up, retest. But, we're coming off of this monthly open, which is now resistance. We are probably a little overextended, and I should have waited for a pullback into this 15-minute area of interest. I was just a little overeager, but it was a small loss. It was another, basic third of my position of what it would normally be. So it was a reduced, it was actually less size, I believe, than the original, or very similar, which I was in profit of. So it was, it was what it was, but maybe because of that happening, I didn't pay too much attention. I didn't want to I don't like to get right back into a trade after taking a loss. So maybe I missed out on this because of that scenario. So on the day at this point, I'm in a winner, but I haven't closed it. And I took one small loss and I missed a trade here. So then we get to lunchtime right here. From here to here is the lunchtime. So as expected, we get some sort of retracement or consolidation. The trend does not often continue during lunchtime. Lunch ends and the trend continues. Again, just flipping between time frames throughout the day is what I do, between 15 and 5 and 1, just as these candles are closing, just to get a feel for how things are flowing. But this was it. This was what I loved. We pushed above the monthly open, we come back down, and then look at this candle off of, I think this must have been a 50%. Yeah, so we pull back 50% and then have a strong order block created here, retest, boom. So I bought as this came back to retest the order block here, and it had, again, the confluence with the monthly open. Now we've regained it, and it's not to say you're going to buy or sell this level every time price comes in contact to it, but when you have the structure, when you have the structure, the higher high, higher low bullish market structure, you buy. This is a confluence. This is great. I love it. Um, if I had seen a reversal setup off of this, I would have taken it. If it was something like, like this, and we run it and we break structure here, this would have been a short with an imbalance here. I would have taken something like that. And so that was the trade I took. And I rode that bad boy. I took a partial. I did take a partial close to the high here, and I rode the rest literally to the very towards the end of the day. So my target was this high here, and that was a pretty nice trade on the remaining 50%. I've been lately taking 50% off and letting 50% run. In the past, I would take maybe 80% off and let maybe 20% run. But I think I've been a little bit more confident that these things are going to run, especially on a day like today, for the reasons I've already said, that I thought I wanted to keep a bigger position on as the runner. But still, you see yourself up and you're at a high, and you on some level, you're like, okay, maybe it could come back down lower. It's smart, and you're already in a trade and you're scaling in more. It's like, just take a piece off, make some money along the way. You're investing the time in. It worked out. It kept going. And then there was another trade. Maybe I won't talk about it because it's on S&P. It's the same setup. I mean, it was just showing the same thing on both, but I think this was it. Okay, so we have, remember this here. S&P takes the swing low. S&P took the swing low. NASDAQ did not take the swing low. Pushed up, created the order block. Remember on NASDAQ, this is the M15 that I just went through that trade. But on my futures account on the S&P, I saw this divergence here, this liquidity grab. And I, at this point, first had already been in a NASDAQ trade on my futures account. And that's why I was like, okay, I'll just check this one on S&P. And it was the same kind of thing. It came up, it made the order block, it dipped down. It was this candle right here, the second candle. And I just basically blended this as one order block. And once it started kind of coming down in here, I just bought at market. So I got probably filled right around here. And same idea. It just started running, took a half partial towards the high, and then held the remainder till close to the end of the day. Let's go. Looking ahead into tomorrow. Looking into tomorrow, we'll just see what happens. We're expecting upside, but who knows what happens overnight. It could probe up deeper and then consolidate, and then we could get a nice short failure to go higher. Something like that could happen. Or we could go higher, come lower, and then find a setup here to buy, so those are the scenarios that we could be on the lookout for tomorrow. That's it for tonight. It's a bit of a longer recap, but all in all, went pretty well today, and maybe we'll trade tomorrow. Maybe we'll just kind of rest up for the next week. But if we see it, we'll take it, and just try to preserve what we have and keep the momentum going into next week.